some of the best experiences I've had mountain climbing aren't the things that happened while I was trying to summit. It's the things that happened around it. It's the people I met and the experiences being kind of off the grid in the middle of nowhere, Peru or Uruguay, or most of my climbing's in South America. And you have to be present and know that these things are going to happen and enjoy them when they're happening. And they happen because you're trying to climb the mountain, and you need to be in shape to fully appreciate that. But there's things that happen on the top of the mountain too, where you're just in awe.
Welcome to the Self-Funded with Spencer podcast. Healthcare is broken, and we aim to fix it one conversation at a time.
All right, well, let's do this podcast, right? All right, so Craig Julien, the CEO of HealthSmart. How are you, sir?
I'm doing very well. How are you doing, Spencer?
I'm doing great, man. And I saw, as I was sort of doing my investigation to prepare for this podcast, I went on your LinkedIn and noticed that CEO title is a recent title back in April of this year. So congratulations,
Thank you.
By the way. Walk me through maybe what this recent transition and how it came about.
Yeah, it's been great. It is an honor to lead HealthSmart. I've been with the company since 2016, and it always been an aspiration of mine to be a CEO, right? You're always preparing yourself for that role, and you never know exactly where it's going to happen. Since I started, I've attained a couple other positions. I became the executive vice president over all of our TPA operations. Okay. And then at the beginning of last year, there was a succession plan that was starting to be put in place. And I wasn't as aware of it as I was at the end of the year, but our CEO prior, Phil Christensen, who was in the organization for 5.5 years and did a phenomenal job, had decided he was going to move on and run another company that he was on as a board member. Okay. So he was planning for his transition very thoughtfully. And at the end of last year, he had started to add some additional responsibilities to me. And then in the beginning of this year, we started to formalize more of what that was intended to do. So I became the president of the company in basically early March, and then the opportunity for him to exit to become the CEO of another company accelerated. Okay. So we had to move the plans up a little bit. So he felt I was ready. He felt the company was ready. Again, I was honored to take the role. It's a pleasure to work with, only in a different capacity, the same people I get to go to work with every day today. So it's been a great experience for me, and I think there's great things ahead for the company.
I was going to say, the only difficulty probably is keeping up with your titles on your business card, right? Having those printed fast enough to keep up.
The funny part about that, I ordered the president business cards, and they didn't even come in yet, and then the CEO cards needed to
You just mark it out and write CEO underneath the handwritten? So obviously we don't trade business cards as much as maybe we used to, especially with the last couple of years. See, I was an RVP title coming in, and at one point it was sort of just like, oh, you're now SVP, and I just kept the old cards. Like, what does it really matter? If I wanted to mark out the R and put an S, I could, but who really cares, honestly, at the end of the day? But just to kind of set the table for today, Craig, we're obviously going to talk HealthSmart. We're going to talk about the valuable role a TPA plays with a self-funded plan. But before we dive into kind of all of the technical aspects of that, I'd like to take a moment just sort of get to know more of your backstory and who you are. Obviously, you've been a successful person up until this point, and I'm sure just the little that we spent together that it's a very well-deserved transition for you. But let's start a little bit further back in the beginning and tell me about your career a bit.
Sure. So I started in Southern California, Orange County specifically. So for those of you who don't know that area, think Disneyland and kind of the surrounding area. I grew up either north of it or south of it towards the beach for most of my life. Started off actually working in an insurance company, CNA Insurance, right? National Multi-Line Insurer. Didn't have an intention of staying in insurance, but worked there for 6 years. One of my first kind of corporate jobs that were
Were you like all of us that we accidentally got into insurance? Okay.
Yeah. Kind of one of those big office near where I went to high school. Okay. My friends got a job there. They said, hey, come on over and join us. And you got to feel what it was like to work in a very well-run, big organization. And it starts implanting things in your head. And then I got an opportunity to work for one of the larger HR payroll companies. Ceridian was the name of it. They compete with ADP and Paychex, Paycom. You hear numbers like that. And that was another area where I got to, again, explore and work with some really smart, talented people. And I started to look back and say, wow, that was really unique. 14 years there, many different roles. I kept raising my hand saying, hey, I'd like to try something, do something different. And kept working through different things, operations, product management, corporate development. And eventually I raised my hand and said, hey, I'd like to run something, right? Do we have anything that we're going to be purchasing or an opportunity? And that ended up, we bought a company in Denver that was a recruiting applicant tracking company. So that's where my involvement in tech got a little bit heavier. manager. So I became the general manager, owned the P&L, moved to Denver. That was 2004.
Okay.
Worked there for another 3 or 4 years. Moved over to Connexa, which was one of their competitors. Was on the RPO side, so that means recruitment process outsourcing, kind of a function of BPO, but more geared around recruiting. And about a year and a half after I joined, 2007 hit, and then the economy just fell apart.
Yeah.
So I had just finished business school a few years before that. One of my good classmates was actually at Triathlons, another kind of tech-oriented company. He said, hey, come on over and join me here. And that's where I linked together the technology that I had gotten exposed to before and my experience at my prior employer, Ceridian, where I delved into a little bit in a strategy role doing corporate development, the field of healthcare administration and healthcare insurance in general. And the breadth and depth of that was fascinating. And that interest in that never waned, right? It was kind of always building, and I kept doing thinking and learning exercises. And then Trizetto happened, right? And one of the largest providers of systems and also services, right? Hosting, applicant management, and BPO services, claims and calls administration. So through a series of roles there, I got the opportunity to run one of their businesses. So they had acquired a company offshore, and I was single at the time, and I said, I'm interested, I'll go.
Well, so what I love about you using this idea of raising your hand, you're always raising your hand. There was a gal named Stephanie Manning from Captive on my podcast recently, and the one thing that she left, I always give people an opportunity to sort of closing thoughts. And that is exactly what she said as a sort of advice to young people is raise your hand. Every opportunity you can, take on more responsibility or put your name in the hat. And here you are living proof. You organically brought that up on multiple occasions, and it's probably why you've been as successful as you were. So just that act of raising your hand gave you a chance to take on something new, probably challenge yourself, stretch yourself, grow. I just love hearing that from you, and I wanted to bring that up. So that also gives me that transition. I was asking you, well, I saw all this tech in your background. When did the interest in administration, medical administration
and that was it.
That was it. Okay, now it all makes sense. So I didn't want to divert your story. So this is the chance to go over to India, correct?
Right, right. And basically there were two companies there, legal entities, really running one business. I had 1,300 people working for me there. Had all the responsibilities functionally of a CEO with the absence of sales and marketing. Right. So we had operations, IT, legal, finance, HR. And that was my first kind of, wow, I get to have an opportunity to work and see all these things come together and work as a business. So it was my kind of stepping stone to, what my goal was eventually was to become CEO of something, or at least have that as a target, because then you get to explore and do all these things. Cool. And it was an amazing experience working with a bunch of wonderful people, learning about a culture that I didn't know about. They got to learn about me, made some wonderful friends, worked my tail off, learned a lot, right? The follow the sun 24 hours a day model. Nobody in the U.S. cares you're asleep. They still want you on a meeting.
Yeah.
And, came back and brought all that, my experience back into Trizetto, and then moved over to HealthSmart in 2016.
Okay.
And just kind of kept that going, where I learned that for me, that exploration, letting my mind and my interests continue to leverage the things that I know and the things that I want to know. And a lot of that comes from just working with people I haven't worked with before and learning from them and figuring out how I can adapt that to provide more value to a company.
Well, and I want to dig really deeply into that, but I'd be remiss based on our conversation prior to this if we didn't bring up, you do some really fascinating extracurricular activities. Yeah. So I have to at least ask you about this. Okay. So I'll let you decide which one we want to talk about first, but you do some really cool things. So tell me about outside of work, some of the things that keep you busy and excited.
This podcast is brought to you by True Captive Insurance, a premier medical stop-loss captive for employer groups ranging from 25 to 1,000 employees. True Captive believes in healthcare that is personal and insurance that isn't complicated. That's why they take a white glove approach, making it easy for employer groups to transition into a program built specifically for them. Check them out at truecaptive.com. This podcast is sponsored by PlanSight. PlanSight is a technology for employee benefits brokers to more efficiently manage their RFP process for any group size, all funding types, and over 20 benefit lines and point solutions. PlanSight is the only end-to-end RFP technology on the market today. Let's modernize your RFP process together. Check us out at plansight.com. TPATrends.com.
I was a typical kind of high school athlete, right? I tended to follow the things my dad did because I thought those are the things I should be doing, right? Football, baseball, wrestling, right? And then you get out of that and you realize, well, there's really not a need to do any of those anymore, but I like to stay active. So I started running, and then I started riding a bike, and then I met some guys out riding my bike in Southern California, and they were fun, and I'd meet with them every weekend, and they were all triathletes. And I thought, well, I can do 2 of the 3. Maybe I'll start learning how to swim. I want to hang out with these guys. They're fun. And so that turned into a triathlon. And I've done 4 Ironman triathlons and 15 half Ironmans. And part of it's the lifestyle, be able to do 3 different sports right at different times. So if you're injured or tired, you got something else you can do. And it's a fun group of people to hang out with. And then from that, I met a gentleman who I've stayed friends with who was into mountain climbing. And he said, you want to go climb Mount Rainier? And I said, I can do that. Yeah. So we're already in shape, right? Let's go test
might
out.
As well, yeah, might as well.
This thing called endurance and understanding how to push your body to the limits, and let's go climb some mountains. So he and I started climbing mountains together, and every year we try and go climb some more, and then you meet people that do that. And then when I was going to business school, one of the guys that was in my study group, as you're kind of exiting business school, you think, I'm going to get my life back. What am I going to do when I get out, right? It's like being on probation. You're like, please, what am I going to do all this time? He said, hey, you want to go skydiving? And I thought, okay, I'm up for that. So that was his idea. We did the first 3 levels of a 7-level compulsory course. He dropped out.
Really?
I kept going.
That's funny.
And that turned into now, 20 plus years of skydiving and great friendships, opportunities to travel the country. I'm going to Chicago next week to do some skydiving with some really fun people. And you meet people from all over the world. What's the common link to all of them? People that enjoy life. They want to share their stories. They don't care what you do for a living. They just want to have fun. They want to be safe. They want to hang out with you. I call it the Sky family.
Okay.
And so that's the camaraderie. And then there's a lot of things that relate to gear. I like gear sports. But being in shape for one allows you to kind of move around and do the other ones pretty successfully.
Listen, you have the foundation to do everything else, right? It's a matter of where do you want to apply your focus and energy. But so with the mountain climbing and the skydiving, there's an element of thrill seeking to a degree, right? I mean, maybe this is an outside perspective looking in.
Some of it.
Do you feel that way though, or is that a misnomer?
On skydiving, I wish it wasn't as dangerous.
Okay.
Because periodically you'll lose somebody that you know, right? And that is horrible. Flying your body with other people in the sky and doing things collectively that you planned on the ground and having it work is really fun. That energy that you get when you're up there and you see it in people's eyes, you can't talk to each other, but you can see the energy, like this is really working. We're pulling this off, right? It's a number of different formations at the time. And then that experience again, that camaraderie when you land, and that was an awesome jump. Let's do a different one. Let's make it harder, right?
Okay.
And so it's not more dangerous, it's just harder.
Okay.
So that's not what we're looking for. We're always trying to be safe. Safety
of course.
Nobody ever wants to get hurt. Nobody ever wants to see anybody injured or die from the sport. It's a fun thing to do. When you first start it, you want to know what that thrill is. Yeah. Honestly, I sleep on the way up.
Do you really?
It's a chance for me to take a nap.
Oh, it's routine for you at this point.
Right.
Then,
but you have to have that fear of what you're doing and be conscious that it can be very dangerous and have your head on a swivel. The kind of rule of thumb we say is when you're up in the sky and you're flying around other people, assume everybody's trying to kill you. Okay. Right. But then when you're done skydiving, right, enjoy the time with those people. Because everybody's 3 dimensions, there's a lot to think about.
That's amazing. When you are a world record holder as well, right?
We have a couple world records. And so what's the world record? It's not how low you fall to the ground or something kind of dumb like that. There are formations based on the total number of people. So the world record right now is 400. I was not part of that. I was a little bit too young. There are formations based on the number of people and the number of different linked formations that occur. So that's the one that I had. It's been since broken, but I think we had 123 people and formed 3 different formations in the same skydive.
Oh, wow. So when you lose a world record, do you feel like, I got to go get it back, or you just go, good job, and let it slide?
I will always be a world record holder for even that,
for even a period
12 months or
most people never get to say that. So I think I would be good with you just saying, all right, we're good here, and I'm happy with that one world record. So that's amazing, by the way. And I was actually commenting to you off the podcast a little bit. One of the very through line style characteristics I see of very successful people is there's also this drive underneath. It's not just the work you do. Very common to hear people do triathlons that are in a position like yours, or rowing or running or just general physical fitness. It seems like there's a passion to also exert the physical body just as much as the mental energy that you stimulate on a daily basis. Do you think that's a commonality? I mean, obviously you talk to other folks in your position as well.
I think it is. I think the need to be active and test kind of, it's both the physical limits, but also the mental, right? And sometimes spiritual, right? Yeah. You think, can I really survive this? Knowing that you can always stop, right? At least mountain climbing, you still have to come down, right? There's a challenge there. But I think too, what keeps you coming back is that camaraderie experience, because most of these you're going to do with other people around you. Yes. Even mountain climbing, right? Yes. You have a rope team, and you have highs and lows, and you're going to have stories to tell out of that. And some of the best experiences I've had mountain climbing aren't the things that happened while I was trying to summit. It's the things that happened around it. It's the people I met and the experiences being kind of off the grid in the middle of nowhere, Peru or Uruguay, or most of my climbing's in South America. And you have to be present and know that these things are going to happen and enjoy them when they're happening. And they happen because you're trying to climb the mountain, and you need to be in shape to fully appreciate that. But there's things that happen on the top of the mountain too, where you're just in awe. Yeah. Where I've been in, say, Bolivia, summiting a 19,000-foot mountain, and the wind was blowing off the backside of the mountain. The sun was coming up on the other side, and we were basically walking through like a wave of snow.
Oh, wow.
So it was like being in the barrel of a wave, and you're walking through it with the wind on one side, dark, sun on the other side, and the curl of the snow, and walking across the ridgeline to get to the summit and just looking up and going, isn't this the coolest thing in the world?
I mean, you earned that view, right? You earned that experience. I mean, like you said, those are the things that are
you got to go out and try it to do it, whether it's raise your hand to go take on a different role, but kind of test your limits sometimes. And I find that I'm probably most enjoy that being uncomfortable is where I'm most comfortable.
Well, there's our COO. He's an avid outdoorsman. He not to the extent that you do, but he's real big into fly fishing. He's real big, and he lives on the mountain. He loves to ski, loves to snowboard. He sent me a book, and I apologize, I forgot the name of the book, the author, but it was about being uncomfortable. The entire book was based around, I think, his traversing to like a long distance ice trek or something like that. And his whole book was predicated on this notion of like getting out of your comfort zone, being uncomfortable, learning how to navigate the world of discomfort and come out the other side of it and know what you're actually capable of.
And what people get out of it, and I've read similar books, so you and I talked about before, the fighter's mind and the fighter's heart, there's a certain purity, right? Where things get really simple. When you're climbing it, trying to summit, usually a summit push happens at night. Okay. Why does it happen at night? Because you want to hit the summit right at sunup or before, because then the ice and everything starts to melt and it changes, and that's when you get avalanches. Okay. So there's this very purity that happens where you're climbing at night and it's cold, and it gets colder as it gets to approaches sunup. And all you've got to focus on is the headlamp that's on you, the headlamp that's in front of you, step, breathe, right? And that purity of what you get out of that just is sometimes mesmerizing.
Well, it distills everything down to the very basics of living and survival, right?
Right. All the things that happen outside of work or in work kind of just get dispelled. Go away, and you just say, all I got to do is put one foot in front of the other.
You mean you're not thinking about emails, like responding to emails up on the side of a mountain?
Sometimes you're up there for 12 hours climbing continuously, going up and down. And again, you get to those highs and lows, and again, you just have to focus. So then you can come back to work and say, well, if I can do that, then getting through this hour-long meeting is easy.
It's easy. Yeah. Well, fair enough. And I appreciate that. And thanks for going that direction with me a little bit. I really, really try to emphasize the human being, and you're fascinating in the stuff that you do.
Thank you.
Let's spend some time on the TPA world. Okay. I think it's why we're here today, and I really appreciate Ron, who's off camera, coordinating this meeting. I want to talk about HealthSmart. I want to talk about the role of a TPA. I want to talk kind of the future of the TPA space and the infusion of tech and all those things. But would you, if you don't mind, for people that haven't heard past episodes on TPA or third-party administrators, define that for us real quick. Okay. What is that?
So a third-party administrator provides services to a self-funded plan sponsor. So what is a self-funded plan sponsor? So a plan sponsor basically acts as like a fully insured carrier. So they carry the risk of healthcare insurance for their employee population. And 61% of all people who get insurance from their employer is self-funded. And why do people do that? There's cost advantages. They don't have to be subject to state regulations because it's governed under the ERISA rules, which is a national federal program. So they have more flexibility.
Yep.
But with that comes some of the risk where they have the financial burden. So most companies don't want to be an insurance company other than to carry the risk and maintain that financial fiduciary responsibility. So they turn to third-party administrators, and we perform all the functions that a fully insured carrier would do, but our client is the self-funded plan sponsor. Think of that as an employer. So all the things related to ID cards and EOBs and processing claims, answering phone calls from members and providers, care management services, RX PBM services, we do all of that on a single platform for our clients. So that end-to-end spectrum, again, of what a fully insured carrier would do, we do it for self-funded plan sponsors.
Yeah, and I heard one time somebody called the TPA kind of the connective tissue of the health plan, especially when you're self-funded. And I do envision your role kind of that. Yes, there's the adjudication of claims and the processing and all those things. But also it's like if there's other vendors that are out there that need to be plugged in, oh, I've got a separate PBM and I need you to help coordinate the claims with me so that they're filed if there's a stop-loss claim. The TPA's role becomes infinitely almost more important once you go self-funded. Who is your partner that's really helping all the administrative side of being self-funded? So I appreciate you defining that for me. I always like to let people say in their own words. I kind of have my own vision of what a TPA is. But I do want to ask you, I envision you had a lot of tech in your background. You did say it is somewhat tech, that there was some payroll and things like that. But how has that experience as a tech person by trade to a degree changed, or what have you brought into the TPA space to sort of modernize what you guys do?
And if you look at the evolution of my career, when I started at CNA Insurance back in the late 80s, right, tech was just starting to get introduced, right? Green screens were starting to get put on people's desks. And you can see that evolution of what that did from a claims workflow and processing, and kind of builds off of that each year as things got more interconnected. Standards, right, then allowed you to connect different systems together. And now where we are today, where things like APIs, right, and open source, right, allows a lot more of interchange of ideas and data. So to your point, right, that you've got a TPA kind of sitting in the middle, generating a fair amount of data, but it also has to share and interact with other systems, whether it's a PBM, care management, stop loss. So if you think about the tech that you see and the tech that you don't see, right? So we'll start with the tech you don't see. So that's the core systems that are intaking sometimes manual things, claims, right? It could be documentation, correspondence, right? Eventually you try to digitize that. And why do you do that? So that it's transportability or interoperability you can share between different other systems and people and processes. Then you have the tech that you do see. So that's the stuff on the outside that members interact with, whether that's the phone system that says if you're a member, press 1, or your provider, press 2. And you're trying to give them opportunities to control or have decisions, right, that guide them to the answer that they want fastest, right, with an element of quality to it. And then you've got things like web-enabled portals, you've got applications, right, and you're trying to be interactive with them, but not to be intrusive. Right.
Okay.
And the trick is, I think, with the things that we tend to interact with a lot that has a financial component to it, because healthcare is expensive and we're always trying to manage that, trying to be part consumer, part purchaser. You think about the utilization of applications that is most heavily used would be your banking application, right? You're checking your balances. Did that check go through? Did I get paid, right? Did somebody withdraw money? On a healthcare side, people don't need healthcare until they need it. So the frequency of that is much, much lower.
Sure.
So you have to balance the need of tech with people who care and treat you with dignity and respect. So our philosophy on this is technology when you need it, people when you don't. So we utilize the same technology and will operate for our members and the providers, the same tech that's available to them on the outside, but we want to be able to use it for them in the event that they don't have it or don't want to learn that process, or their frequency is intermittent and it becomes a cost or a burden to them. An example would be on our reference-based pricing solution. So there are tools available for members to self-serve. I can find a provider that is friendly to accepting the terms and conditions of a reference-based price, basically a direct contract, or they can just call us. So we've chosen to allow our teams to control that for them. That also helps to let us guide some of the benefits decisions they're going to make, right? Do you know if you do this, it's that? And an app doesn't talk to you, right? So the human interaction we feel is really, really important.
100%.
Tech if you need it, people if you don't.
I love that. Tech if you need it, people if you don't. That's a really simple, good way to put it. So do you think there's a push, though, to modernize the TPA space, right? Is there even a little bit of an arms race to who is them? You've got your, what is Collective Health is out there as a tech-enabled one. What's the other one? Not Flipped, but... oh man, the name escapes me right now, but I think they started sort of as a tech-forward platform. Do you think there is a little bit of a push with a HealthSmart that's been around for a significant amount of time to kind of keep up with the tech evolution as well?
We've seen over the last couple of years an increase 5% year over year in the utilization of our web portal and mobile app. And we've seen a 64% decrease over a 5-year span of the number of phone calls per employee.
Okay.
So there is a transition happening, right? And then you're trying to figure out which lever am I pushing or pulling that's causing that. Now, one of the big drivers sometimes the government gives you a little push and gets everybody going in a certain direction is the No Surprises Act or transparency in coverage, right? So this belief that healthcare isn't transparent with cost, right? There's some truth to that, right? If you talk to doctors, they don't know how much the services that they're providing to you really cost, right? Because there's reimbursement differences, the benefits, copays. So there's a complex mix there. So I think what's coming, which are the price transparency tools that will be enforceable at the beginning of next year, we'll have to see if that creates that shift where people start interacting with what will be a mandated technology where they can shop. Truly shop and see, before I make the decision to get services, how much is this going to cost, right? And kind of run it through a mock claim adjudication process where we would, as a TPA, we'd be responsible for receiving those procedure codes, applying the benefits out of pockets, right, that are necessary, and then sending back kind of point in time to a member to say, if you chose to use that service from that provider, this is what it would cost you. And that transparency doesn't exist today. Sometimes in a dental environment it will. They'll say, did you know that you're out of pocket today because your benefits only cover it? So that's a different scenario. The RX world's a little bit different, right? Those claims process real-time adjudication. Why can't the medical side do that? I don't think it's lack of willingness to do it. I think because of the number of things like prior authorizations, ensuring medical necessity, place of care, quality of care, the different incentives that occur across this ecosystem drive certain behaviors, right? And that's where, from my start in healthcare, you learned that the need to align behavior systems, right? Us as the patient or member and consumer, sometimes purchaser, increasingly high deductible plans. Right now we're a purchaser of healthcare. First dollar is on us up to a certain limit. And it's not the world of I just throw down my card and I pay my $20 copay and go on my way, right? So that's the complexity.
It's complex, and it's also, you're between two minds, right? We have this idea of consumer-driven healthcare, and especially with the high deductible health plans of old, where it's like, hey, well, people will be better consumers if they have skin in the game or they have to pay X amount of dollars up front. I think the reality was a little bit different than what was expected. But also, do you take a paternalistic approach to really leading the member through a decision-making process, or can you give them good information and trust the patient, the person, to actually make good decisions themselves, right? I think you have different perspectives on that. But either way, I'm of the mindset that the more information that a person can be given up front to have at least a sense of what it's going to cost, or have a sense, like you said, of the choice to go to one provider or the other based on cost or quality, things like that. The more you can arm a person on the front end to make a decision, I trust people that they're going to make better decisions more often than not. Right. So how do we get there, though? That's the bigger question.
And a lot of it's presentation. So I think when you're exploring the use of tech versus people and that enablement, right? That's why we feel passionately about having people enabled on the phones to provide education, assistance, decision support for those critical needs where people are concerned, right? And kind of people make a choice when they start to consume kind of massive amounts of healthcare. Not because you're older, it's because you have something in your environment, either for you or a family member. And people make a choice of kind of this hope or reassurance, right? So they want to consume healthcare up to their limit, not what you tell them the limit is. So example, hope, right? There's something that is happening to me or a family member that could be terminal. Right? And I've heard about a procedure. I've heard about a doctor that does this, right? And those tend to get put into the bucket of experimental and investigational, which means they're off the list of approved, right? But as the person who's terminally ill or a family member, why, right? So that continuum of hope. I want to use every means possible, as we would, right, to try to save my life or somebody else's. The other side is the reassurance, well, you don't have a broken leg. Are you sure? Shouldn't we do an MRI?
Yeah.
Right. And that's again, you consume healthcare and it gets very expensive. I think for most of it is the kind of the ears, nose, throat, chest stuff. I think people are fairly accepting of kind of those decision support things that move them left or right.
Okay.
I think the big trend that's happening now too is that place of care where healthcare is going retail and virtual.
Yeah.
Right.
Yep.
So again,
Huge
COVID kind of created this
Yeah.
push all of a sudden that you couldn't see your doctor and they went virtual. Or there are exclusive models like Teladoc, who's a partner of ours, who's built their business off of virtual. So some of those barriers to using some of those available forms of care that can be lower cost, but lower cost sometimes means increased utilization. So do you need to go to an urgent care where you could have set an appointment and gone the next day?
Right,
because the retail nature of something makes it convenient 24/7 right next to my supermarket.
Right.
Oh, I can go get the thing of milk and I'll go see the doc next door. So there's that balance there of that cost visibility. So price transparency will help bring some of that. And then that balancing of the hope versus the reassurance. And how do you enable people, right, to have that conscientious decision making where your child's sick and they can't sleep and you don't want to wait till the morning, so you're going to go to the urgent care.
Yep.
Right. And then you get that, not I want to say balanced bill, but big bill, right, that you didn't expect, but you
especially because that urgent care after a certain time turns into an ER, right?
Exactly right.
That happened to us about a year and a half ago, and my daughter, and it was like we didn't have a choice. It was 3 o'clock in the morning or something like that, and it was like, well, I know as a person that's in the healthcare space that I know this one turns into an ER after 11 o'clock, and well, it's the only one within about 25 miles. This is a pretty urgent deal. That's where we're going, but I accepted even on the front end that was the choice I kind of made based on where we were located. But that's just that comes down to timing. If it had happened at 7 o'clock in the evening, it would have been an urgent care. It would have been a completely different bill.
Right. And then how do you trigger that thing that says, you know what, maybe I should call the nurse line that my employer told me about, right? So trying to build that trusted relationship that is not the first thing they think about, but it is an alternative, right? We have wonderful people on the phone, whether it's a customer service rep or a care manager or a nurse line, but they don't know what's going on, right? You're somewhat reactive to the event. So you may not know what happened until the claim comes in.
Well, and it's behavioral as well, right? Like your first instinct, oh, this is an emergency. I go to the emergency room. Or is it really truly an emergency? Do I have text access to a doctor? Or can I immediately get on the phone with a physician? That's why I really like the idea of this push towards direct primary care, the brick and mortar style, as well as perhaps a virtual component to that. I love that model because it becomes a fixed cost model, and it also allows those to be those claims to be extracted out of the system, sort of partitioned over here and bucketed, but they can handle a lot of those things, even things that you perceive as an urgent style. Oh, I cut my finger open, I need stitches. Well, could my actual direct primary care physician give me those stitches instead of going to the urgent care instead? So are you seeing a lot of that happening in your space as well?
Yeah, we're seeing a shift. Virtual care, we're actually exploring virtual MSK, which is the PT type services. Those are becoming more prevalent. Again, tech enabled, right? You have an application, you have a coach, a trainer that walks you through some of those things. So trying to capture those opportunities where it's awareness, right? Do people remember that they have these things that enable the care that they want, maybe at a different price, right? I think what we've seen too is that the first thing people think about is, do I have a provider that is in network, or is my provider in network? And if that doesn't get solved, then they assume they don't have coverage, when those two things aren't correlated, right? But my provider being in network and I see the person I want to is equated with coverage. So we have to solve that really well. And when high performing networks or the RBP, when you have time, right, to really handle those well from a member centric perspective and guide them through all the things they can do and try to steer away from the things that they can't, right? And that's where the benefits should reward them for doing those things, right? Because it's a cost trade-off, to your point. Sometimes I don't care and I want to go the other way. Well, there's a cost for that.
Right.
And it shouldn't be viewed as a deterrent, but it is a higher cost, right, for your employer. So therefore you're sharing, right? That's
why I think that there shouldn't be this concern over, well, if it costs my employer more money, that I shouldn't also perhaps have at least a correlating increase in cost, right? I don't see anything wrong with that. If you were given two options, both of them being equal in terms of outcome, but one of them is much higher cost, and you still chose to go to the higher cost, well, you're also costing your employer more money. So if armed with that information, like you said, you don't deter them from making that decision. But hey, if you do make this decision, just know your cost is X instead of Y.
And we have the fixed cost that we think about, the actual cost of those procedures, but you also have these sometimes barriers to utilizing the virtual care models like a teledoc. And once you break that barrier, you create your logon, you've got your profile, and you do it once, you'll be hooked.
Yeah.
Right.
Yeah.
So how do you create that?
How do you get them to do it the first time?
It,
sure.
Right.
Yeah.
Do you create a $50 reward to create an account? Because that copay that you would pay for that event is low, and I don't have to leave my desk. And they call me in 20 minutes. How wonderful is that?
Yeah.
Right? So that utilization of that, again, I think COVID helped push to some degree a higher adoption. I think people are staying there. They're utilizing the virtual model. For those things, it's appropriate.
Right.
And the teledocs of the world are expanding the number of services, especially with video now. You know, they've gone just beyond the typical stuff. They're getting into dermatology, peds, mental health, right? Substance abuse. Those things can all be done virtually that typically you thought you'd have to be sitting on a couch to do.
Right.
So huge adoption. You see that in the marketplace with just commercials, right? And the high profile influencers are starting to promote that right now, that the stigma around it is going away, and the access to that mental health care and substance abuse, right? Huge drivers of issues, right? Where you start to get comorbidities.
Well, especially when you have like a situation of substance abuse or mental health that's maybe exacerbated by substance abuse. It's like there's an immediacy of need right there. Well, if I can get access to a person now rather than, I'll schedule an appointment 2 weeks from now. Well, the crisis is happening right now. So having a chance to be able to access somebody, I love the push that direction. And again, I think the more services we can add virtually, you do lose an element. Like why I like people sitting on my couch instead of doing a virtual version of the podcast is because of the rapport and the sort of nonverbal communication and the energy and all of that. But there are plenty of things that a screen definitely services that
sure
outcome.
You can see the expressions, you can see the emotions, they can see it in you. So I think we've adopted to the Zoom world, right?
I was reluctant at first, but I came around, and it's part of my daily life now. But as a salesperson by trade, right, you like the ability to go on site and meet with your broker clients and things like that. But when I discovered, you can get about 90 to 95% of what you do in person, and I don't have to travel, and I can have 5 meetings in a day instead of 2, right? All of a sudden, it just opens up your world quite a bit when you embrace it. But I still like doing this as well, just full disclosure. I do want to bring it back to HealthSmart a little bit. I want to talk about kind of some of your solution set, right? Or who are you best fit for? Do you have kind of an average client profile, employer profile? Describe to me maybe what that might look like.
So we have our kind of traditional commercial type plan, right? And you see that in the 300 to 350 space, knowing that, say, we'll call it 1 to 100, we'll call that the small market, and then 100 to say 1,000 is the mid, and then above 1,000 to say 10,000 is large. So we talked about 61% roughly of people are self-funded insurance plans. So that sweet spot for us, where a majority of the clients is in that 300 to 350. But there's a need down lower, so that 1 to 100, where their willingness to be at risk is lower, right? Because they just don't have the financial capital. But they want the same benefits of a fully insured or a self-funded, where they have control over their plan, control over the data, right? They can be more interactive. So we've actually looked at how do we come down market and make a self-funded option more attractive for those types of employers who want to be self-funded, but maybe can't get the stop-loss rates, right? Can't take those hits. So we have an offering that we've rolled out both in Dallas-Fort Worth here this month and in Houston this last week. It is called Smart Care, and it is a level funded option.
Cool.
So it's kind of a hybrid for people in the industry between self-funded and fully insured. So in that 1 to 100 market, there's only about 13% of the employers offer a self-funded plan. So that means the balance is fully insured. So that's our addressable market there, where you've got people who want more control, right? Have looked at the BUCA plans, have been part of them. So the Blues United, right? Cigna, Anthem, Aetna, and said, I want to do something different for my business and for my employees. So in a level funded option, now your premiums basically are level. It's kind of a single payment, locked in for 2 years, no lasers, no upfront disclosures, right? And you get all of the HealthSmart services embedded into one offering. So everything is in the bundle.
So it is a turnkey solution. Then.
Right. And in North Texas, you get to use one of the best premier health systems here, Baylor Scott White.
Okay.
So that's your high-performing network.
Perfect.
Now, that's within a service area in the Dallas-Fort Worth area. If you're outside the network of that service area, we have an option. And if you're just not quite there and you're kind of the PPO kind of guy, then we offer a side-by-side through one of our national networks.
Okay.
So it's not a one-size-fits-all where everybody feels a little uncomfortable and some love it and some hate it.
Yeah.
We tried to create a balance there. So the side-by-side, I think, addresses the need for people to say, you know what, I'm willing to pay a little bit more to get that provider in my network, because then they feel like they have coverage. So we see in these metropolitan areas in that 1 to 100 market, where that high performing network in a level funded model is really, really attractive.
Well, so if I'm an employer outside of the sensitivity to price, right, and I'm looking at the HealthSmart solution, the level funded option, and I'm looking at, say, a Cigna or an Aetna AFA, right? How do I decide to go away from the carrier model, that's sort of that prepackaged model, and over to something like this? What are some of those things outside of that price, again, that sort of differentiates your solution to one of those?
So as you start going up into the 500 and above, that's where you start to get into that ASO type model, where fully insured versus self-funded. And that's where you can get even more control over your benefits, your plan. We had a client in Florida just recently has been fully insured their entire existence that they've offered insurance. And they wanted more control. Yeah. Right? They wanted access to their data. Amazingly, that comes up regularly when we do finalist calls, is when I ask for my data, would you give it to me? Like, yeah, it's your data. Of course, yeah. You just tell me how often you want it and what format you want it, and we'll put it in reports for you. We'll review it with you. We'll give you suggestions. We'll help you design your plans differently from it. That doesn't exist when you're in a fully insured model. Yeah. So that feeling of I'm not in control, if you're paying the premiums and you think you can do better for your employee population, which is what this company in Florida did. And it was a little bit kind of anxiety ridden for them because they'd never done it before. So we brought in our talented people, as we always do, and guided them through the process, helped them make decisions about their benefits. How do you enroll people? How do you get people to look at wellness plans? How do you create that engagement and that excitement, the adoption of, it's not a big, broad network, right? It may be a little bit narrower network, but you have the same quality of care, and the cost differential for the employer and the employee is different. So that's where we see that how do you get people coming off fully insured? If I look at it as a self-funded to self-funded, I think the organization of all of our tools, right, whether it's the core systems, right, the claims adjudication, with care management, right, all of our own nurses, right, registered RNs, dietitians, PharmDs, right, with our own PBM and our own RX specialty programs, right? So when we talk about tech, right, this is where you can start to think, how do I create interoperability and those moments or events where you can use data, some of that's happened in the past, but to inform you. So you're familiar with trigger diagnosis codes, right? So for those of you who don't know, those are specific codes that trigger a diagnosis that typically drives a lot of healthcare costs. So stop-loss carriers want to know about that. The moment one of those hits, they want to start seeing what's happening because they know that the healthcare dollars are going to grow. We use those two to invoke having a care management type discussion. From an RX perspective, those specialty drugs, again, we may be able to change the drug use or the frequency, right? Having a PharmD be part of that equation, and talking with a provider and having an engaging conversation, right? That all benefits the member without disrupting any of the care. We're not asking him to see a different doctor, right? But trying to get to the same outcome, but maybe bring the cost level down and also improve the quality while treating people always with dignity and respect. And we balance that with both the members and the providers, because the providers are a key component of the care. So we have to treat them at the same level and high standard as we do on the member side, as we do on our client side. So that's where I think our model, like some TPAs, right, have an integrated in-house model where all of our systems are connected technology-wise, and the people and the processes that use that data effectuate an outcome that benefits the plan, right, our client, and their members, right? So we're trying to get that quality of care, cost of care, and treating people with dignity and respect.
I love that, man, and I appreciate that. Like what is that earlier? You said you tech when you need it, people when you don't, right? And it's still the emphasis on people and the way that you operate. Now, I may use a little pun, but you said you're you climb mountains, right? So at your vantage point of the mountain is beautiful. What are you about your vantage point now? What do you see internally within the TPA space trends in this? You touched on tech. We touched a little bit on down market. What other trends are you sort of seeing right there?
So you sometimes look at other industries and you see things that happen at the jumbo level, right? So the 10,000 and above employers, right? Where the cost that they can bear and then you get distributed over a larger population, it starts to then become a trickle down to the halo effect, right? You've got the halo and then it starts to get the cost unit wise starts dropping, right? So I'm focusing a little bit like an operator. I'm thinking about unit costs. But to some degree, the market gets proven that some things will work. So if you go out of the commercial space and you look at what Medicare Advantage plans have done, right? That intimacy with the member and managing the continuum of care, right? And they're very involved because it's a Medicare Advantage plan. Now the commercial side's picked up on that at the top. So that's where the Accolades, the Quantums, the American Airlines, the larger groups that need that kind of fully informed concierge model, that's where that started. So it's proven the market's there. Medicare goes to commercial, jumbo, and now it's coming down. So where we as the TPAs that focus in that, whether it's the small, medium, or large, we're starting to see this interoperability of data, right? And you have now teams that have typically based either clinically, so that's the nurses, the PharmDs, the RNs, and then the benefits side, right? And then how do you integrate those together to create a common experience for a member or a provider? Again, you're trying to adapt to that decision support using data, right? Our platform is DeerWalk, right? Industry standard out there. And how do you create those events, right? Like a single point of entry, so that on an ID card doesn't have 5 phone numbers, it has 1. Right? You still need to call, right? But you have 1 phone number. And it takes out that, which number do I call? Am I in the right place? And when that does occur and people call a number, right, you gently and you get them over to the right place. And you can tell companies that do that well, right? You almost get rewarded for calling the wrong number, right? You feel it, right? It's not that, hey, I'll give you the number, call them, good luck. It's, you feel like, I didn't call the right number, but it's okay. I'm having a good experience. So that's, I think, where the member advocacy and the concierge level, now because of data, it is easier to connect those events, where now as a customer service rep, if I'm talking about benefits, I can start to see things that are happening that I can suggest things, right, that may have a clinical outcome. And that's where on our reference-based pricing model, we take that need, say, as a prior authorization for something that's coming in, and that gets routed first to the benefit side to make sure that's the right benefit for that event without delaying anything. And then we have a clinical component to say, is that the right care? Because if it's not covered, it doesn't matter if you have the right care yet. So we're trying to balance those two things and do it in a timeline that's not disruptive, right?
Well, so as somebody that if physical fitness is a big part of your life, where does that continuum of care stop for a provider side, or even somebody kind of more on the service side like a TPA, and where does it become the member's responsibility? This is a philosophical question I've been trying to answer for a long time now, is like getting the person motivated to make better dietary choices or physical exertion, exercise. Where does your role stop, and where does the member, the individual's responsibility pick up? And can we push that continuum down further towards getting a little bit more involved as an employer to get people to make behavioral changes for their life to benefit the company at large? Now, I know there's no right answer, but I wanted you to weigh in on that.
It is a tricky one, and it's one of those things that I started studying. There's actually a field of study around this. It's called behavioral economics. And it was kind of a nascent field in the early 2000s. It's continued to grow. So if you're familiar with the book Freakonomics, that's behavioral economics. So there's a number of people out there that are pursuing this pretty passionately. And it's that balance of how people make decisions, right? The classical rational agent model of economics falls apart. Why did they go left when everything said they would have gone right? And this is how policy gets created at a government level, right? They're trying to influence those things. So to try to answer that question directly, I think we're still early on in figuring out our own behavior, what causes us this hope or reassurance, right? How do I make good decisions early on when it's something that's inside of me sometimes that I can't see yet, right? If my hair's growing too long and I need to get a haircut, I see it. But if I waited too long to go to the doctor and now that's causing a problem, how do you get people to see that? And that's the behavior economics part of how do you create a repetition to do those wellness things or take care of yourself, the markers that tell you that your DNA says, right, the 23andMe, is that going to start to become part of something that you have to provide to your employer? Right? You're predisposed for something, and not to say it's a disqualifier for your employment, but it allows them to create a plan for your wellness, not treatment, but your wellness that gets you going in the right direction. I mean, 23andMe is a beautiful model. You pay somebody to tell you something about yourself, and then they use the data scientifically to generate research, right, that then hopefully benefits the rest of the world.
Well, to get in all sorts of questions of privacy, right, and who can access
that's the medical ethics or bioethics.
It's a fascinating question. I kind of like to pose it every once in a while, especially somebody that sort of intrinsically does those things on a daily basis like you, because it's also, well, if I am employed by this company and they're providing, at least paying for a percentage of my health care, and what is my obligation to them to take care of myself simultaneously to them providing that coverage, right?
And it's tricky.
It's a tricky question, but I like to ask it because I think it's worth
And I think a lot of it
debating.
is right now is financially driven. Right? Trying to create incentives, right? Not penalties, but try to create incentives where it costs less to do something than the alternative.
And I like incentivization models for certain things, or also there's the alternative that's the carrot or the stick. Occasionally there's, I don't want to say punishment, but there's perhaps a worsened experience or a lessened financial outcome in making certain choices.
And I think around that, we're all interested in pushing more information, right? And how do you get that to be a pull? Because we're all overwhelmed with notifications, right? How often does your phone ask you, do you want to be notified, right? And that becomes overwhelming. You just click it off. Right?
You silence things over a while after they just keep hammering you, right? So the pull side, explain that then too. How do we shift a little bit to the pull side?
So how do we get the pull? So is that the introduction early on? So this is one of the things that we're doing in Smart Care, where as clients are coming on board, that enrollment process, the identification of their provider that they use today, is it part of the high-performing network or not? Getting that established early on, right? To gain that confidence. Yes, your provider is in the network, or it isn't, but let me help you find an alternative. I see where you're living. Here's some options. So you get that up front before the need occurs.
I see.
Because then that panic, right? That they're not in network, I don't have coverage. That's we're trying to overcome that. Now you've built a relationship with somebody. You've got that outreach. You're trying to help them before the need is there, right? Empathetically, right? Trusted partner. And now you may be the pull option where they say, hey, I'm thinking about, and now they're pulling from you as opposed to you're trying to push.
I like that. Okay.
Right? And it's not going to be a universal thing. You're trying to get to the people that are that 80-20, right? They're 80% of the consuming of it is coming from 20% of the people. And pregnancies, right? How often in an enrollment you're looking for that transition of care, right? Who are the pregnant mothers out there? And nobody raises their hand. And then all of a sudden it happens, and now you're trying to figure out how to get them, right? So we're trying to get that incentivization to have people be able to share that information with us. They're pulling it out. Well,
so speaking of pulling out, let's pull ourselves out of the minutia a little bit, and let's talk about big picture of healthcare at large. So we talked about trends within your space, but maybe trends within healthcare itself, or where you think we're sort of the eventualities of where we're moving over the next few years in healthcare.
There's a famous saying that Ronald Reagan had about government and how it looks at business, and it sees business, it taxes it. If it keeps moving, it regulates it. If it stops moving, it subsidizes it, right? And so
where are we?
Where are we in that kind of continuum from a Reagan quote? I think obviously with the price transparency, right, and trying to remove some of the sting like No Surprises Act, which I think was a very good idea, and just concept-wise, that means that if I'm in a in-network provider and certain services are performed like anesthesiology that is typically out of network, that I don't have a bill that shows up at my house for that. Ambulance services, not to be critical of ambulance services, life flight is important, but when it's a $35,000 bill and you're expected to pay all of it, that could be a bankrupting event.
Yeah, absolutely.
So that's where I think that move to more control cost on some things, and then price transparency, I think, for the member experience or the patient, that also gives them a little bit more control. I think the retail and virtualization of healthcare, right? And this is where you see CVS gets into the insurance game. The bigger companies like United, right, are buying into that supply chain of the delivery of care to try to control that outcome. Now, what is that really getting to? Aligned incentives.
Okay.
I don't think it's a land grab to try to do something other than provide good cost and quality of care for people, right, that are on those plans. Mm-hmm. That if you're off that plan, you can still use them, but I think they're looking at the holistic nature of care, connecting the payer and the provider, right? And then how much of that can get adopted into the self-funded world and how fast, right? I think member advocacy, continuing to use technology and people to help kind of guide some of those decision things, whether it's a proactive thing, right? How do you get people to pull from you?
Yeah.
Or you're doing it as the event is occurring and somebody's going in for, say, oncology, which are open-ended. Cancer is just going to happen and be open-ended, right? Yeah. And those things you maybe not be able to prevent, but how do you try to control the cost while maintaining the empathetic, dignity-based process that needs to occur anyways? So those are the things I'm thinking about. Cost, right? I think the government did a good job there. Price transparency, again, that's coming 1/1/23. And then this kind of member concierge advocacy and the interaction of the data that is at, kind of in their hands when they need it, they're pulling it. But how do we use it as the plan administrator, right, the TPA, to help guide people through when you have those opportunities that surface, right, where you've got a provider calling us, you've got a member calling us, you've got enrollment, you've got a life event where you're trying to create those trust moments, teachable moments that get people to interact with their own personal care in the form of an insurance.
Perfect. Well, I appreciate, kind of your perspective on that. I always wondered then, like you said, you think the government did a good job with the pricing component, right? Like what is the role, if any, there should be within healthcare? And I think that's probably a bigger conversation for another podcast, but I always like to hear just the perspectives of people within the private sector trying to do good things and solve these problems through that. Is there potentially a role or a more, an increasing role with the government in the future potentially as well? Or do you see that ever coming to fruition in the U.S.?
I've not been in the healthcare industry my entire life. Okay. Been in it from the payer side mostly, right? Whether it's the insurance on a multi-line payer that didn't have healthcare, or now on a healthcare line of insurance, kind of at Trizetto, both on the fully insured self-funded and now on the self-funded side primarily. I think people's intent generally across the continuum is good.
Yeah.
Right? I don't think there's anybody out trying to get you. Their incentives are sometimes aligned to maximize profit, right? But the inefficiencies sometimes that occur, I think it is everybody's responsibility to try to take those out, right? Where you've got friction points, where people don't have access to something that they generally can't. The thing that keeps me up at night about healthcare and what we can control are those, what I call denial of care events, where somebody rightfully should be able to get healthcare, but the verification of benefits or coverage is established first, as the provider should do. Typically happens in a retail setting like pharmacy, right, where they do a real-time hit and they say, are you eligible or not? And they're not, because there's a problem with the eligibility file. Somebody put their name in differently than what it really is on their ID card, right? And the system falls apart immediately right in front of them. And that failure, right, cascades out as I didn't have health care. So I instantly try to focus on making those events not occur or minimizing their impact, right? That's a common one, unfortunately. Again, it's data translation sometimes, but then you look at it on those settings where I have an elective procedure or I have an emergency procedure and it's your child, right? And taking absolute care to make sure that those events don't happen, and when they do, they get resolved as quickly as possible. I'm hugely passionate about that. So you can sit back in an office and watch all the data, but those events, right, we try to really execute on well, one, to make sure they don't ever happen, those failure points, and when they do, it's all hands on deck.
When I'm very hopeful. I'm always optimistic about this industry, and I'm always optimistic that innovation will prevail, and that when there's a will to solve these problems, I think the ingenuity of the American mind will solve it. So I know we're over an hour, and I appreciate all the time, but if I'll give you just 30, 60 seconds, why don't you land the plane with us here? Any closing thoughts that you'd like to add to today's conversation?
I think that the healthcare industry continues to fascinate me, right? And I think there is so many opportunities out there for TPAs, for self-funded plans, for the insurance industry in general to continue to evolve to meet the needs of our population. I think HealthSmart has done an excellent job getting to the point we are at. We've got an amazing team. We've got the right products. We've got the right motivation. Our customers are telling us we're doing a good job. We've got a net promoter score last year of 71, which, again, is amazing. That puts you in the excellent category.
Perfect.
We're doing all the things that we need to do operationally and from a care perspective, I think, to really help the industry move forward. And that's my passion always, every day.
Awesome, man. Well, pleasure sitting down with you. Thank you for telling me your story as well as a HealthSmart story. I really appreciate you lending your expertise on the podcast, and hopefully get to see you again soon, man.
All right. Thanks, Spencer.
True Captive believes in healthcare that is personal and insurance that isn't complicated. Check them out at truecaptive.com.